All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for Friday night, February 24th, 2023. We'll start with the swing portfolio. In sequence, Alcoa yesterday, we took the one-day gift. We watched it gap down and then basically just compress into a wedge. Um, it's holding support at a key level. No trades on that one, flat overnight. Cliff, basically the same thing. The sell off was not as pronounced as Alcoa, holding support at a key price level at 19.50 and also here at 19 and a quarter. This little wedge compression testing the PSAR flip. We'll just play both of those as 3-minute intradays. No hurry to get a swing trade on those. Just want to compare that to U.S. Steel. U.S. Steel, on the other hand, had a very nice pattern intraday where it actually gave a 3-minute after the gap down, gave me a 1-2-3 entry in here on a standard risk, and it closed well, and I was willing to hold that one. Rather than initiating at the PSAR flip, I was able to use the 3-minute trade, which looked good on a 30-minute trade. Basically, it allowed me to get long on the 3-minute chart right where it was finding support statistically on the 30-minute chart. So I was able to take the risk below that support level. And now, instead of deciding to initiate here with a cold position, I was able to make, half an R on the intraday and then keep a piece in order to leave that as a swing trade. Now, I'm not moving the swing trade off of here. I want to give this thing a couple, 2 or 3 days to breathe and to let it try to get some traction all the way back up to the 5-day high. So I'm not in a hurry to raise this stop on the 30-minute chart. I'm going to respect the PSAR after it flips. Okay, back to the other symbols. All right, this is Chevron, or I'm sorry, CVS Pharmacy. So this was a one-day opportunity. This is one where it closed very poorly yesterday, and then it opened and sold off harsh. This was a one-day very orderly trade, and I took the 1-2-3 exit at the edge of the dragon and was happy to collect, about 0.7 on that one and have it flat over the weekend. So that was a intraday swing opportunity, swing trading one day at a time. On the other hand, Devon Energy, I just can't let it go. So we're long from 4 days ago, and the stop is still down here. It gets out of the trenches over here and is slowly trying to grind higher. But it needs to get above the 5-day high and this PSAR, or the RL10 flip. It's got to get up through there before I'm going to raise that stop. So I like that it hasn't failed yet, and we'll take it. We'll take that one over the weekend. This is Electronic Arts. This was the one-day gift yesterday that we collected. It gave what looks like a head fake. We didn't bite, gladly, and then today it just opened down here and then monkeyed around sideways. This almost feels like a compression into a critical state, compound critical state here, where there's enough room now for a nice move to the upside. But if it breaks below 109.50, I'll be short that thing so fast it'll make your head spin. So this would be, for me, an intraday trade to the upside if it works. And then I'll think, if it gets up in here, do I want to hold it as a swing? And then if this breaks down, this will be a short swing instantly, because that's the directionality of this move. So flat over the weekend on electronic arts. Emerging markets was just an observe and report. The big move on this thing was the huge gap down. There was a minor sell off, but it wasn't enough to keep failing, and that little bit of a recovery allowed the RL10 to reverse. Now, this is at a 10-day and 30-day low, so this will probably show up as a channeling, and this will be a perfect 3-minute trade to here. I'll think about the swing trade if it can break above the mechanical entry. That's where I would pick up the swing. But this region right here is a nice intraday trade, especially if it just opens where it closes and we can get a nice tight risk box. So that's, and then if this fails, I'm short on a swing. Easy. This is Mexico. Again, another big gap down. Oops. There we go. Big gap down. And then it didn't really fail further. It did not fail further, and it even PSAR flipped here. I'll be ready for this if it gets above that little hump of the RL10 with a tight wrist box. I'll play that as a 3-minute trade to the top of the day where I would pick up a swing. I'll be short on a 3-minute trade from here, and I'll pick up the swing if it fails through 56.80. So that's a nice compound critical state. I like seeing that. The downside target on that one, draw that in purple, comes back to this support level, 56.50. So if we get short here and this comes down here, this will be the test. If it just breaks through here, then I'll add a position because it will have violated a key support level. Like all of the buyers who came in here and drove it to here, if they don't come in and rescue it here, then it can only be because it's going to fail. So that'll be an interesting one on Monday. Brazil took a 1-day intraday on this one. Here was the gap down once more, and it started selling harshly, so we were short. Standard risk. Later in the day, it comes to the edge of the dragon, so I just cash that here and make about +2. And happy to be in receipt of that gift. I'll be ready to resume the short if it just violates below here. Not in any hurry. It's just that when you see gaps of that size, why do I want to hold that over the weekend? Don't want to. Intel, we closed the 2-day short yesterday. It would have paid off a little more today. This was not much of a sell-off. We could have expected this to fail further, but there was some buying pressure that stabilized in here. So that actually makes me think of this as a potential very low-risk PSAR flip on Monday. So if I put that like right here, and then take this to be the risk box, you're talking about maybe 40 cents. And then if it breaks above today's high, that would be a good thing, and maybe a swing. And then clearly instantly short if it violates below this low of the day and the collapsing dragon. So that's about as tight a risk box as you could ask for, and that feels pretty good on Intel. International paper. This was tempting. You know, you've got a Kata 2 kind of developing here. It's on that side of the PSAR for sure. In the last hour, it had cleared the emerging dragon and it was into this gap space. So the next clear resistance is up here. So That was tempting. I just said we're in sideways normal, and I'm not in a hurry. And this thing has disappointed a lot before, and the big gaps, except for the earnings day, have been to the downside. So I didn't want to get bushwhacked in here. I'll just wait for Monday and see if it can actually get above the daily high, and then I'll look at it there. No hurries. Real estate, we closed the short yesterday, the 3-day short on the PSAR flip. Today, it opened here, had a little wedge down, and then closed. This was such a nothing day that the only thing I can say affirmatively is that that'll be a nice risk box if this starts taking off on Monday. So this would be an intraday trade here until it breaks above the mechanical entry at 88.50. That's where I would initiate the swing. I'd like to make money in here to pay for the swing trade there. So that feels like an opportunity, especially if we see some strength in the futures market, then I will especially be prepared for that one. This is McDonald's. This is one that I was willing to hold over the weekend. This has been such a disappointment that the follow-through did not materialize, so we ended up scratching here. Then it had one big leg down. The recovery only got halfway back up the stack, and it rolled over again today. And I initiated the short here. That was from a 3-minute that became a swing. This was a really decisive move downward. The rebound closed poorly, like it never really got across the dragon. The PSAR is still trailing, and all it has to do is fail below, say, 263, and this thing will continue to suffer. So this was a swing short I was willing to hold. Marijuana, I closed that short here. Was not able to pull the trigger here or here. There were some short-term moves, but this one is so thinly traded now that it doesn't feel like there's runaway failure. And looking at this closely, I am thinking about if I want to regret not taking that long right there, just on the basis of just how bad that's been. But over here, the buyers came in and took it higher. So I think there's enough possibility for that I'll be ready to get long if we see a move above, call it 665, and try to trade that up to 7 and 720 with a tight box, and then I will go short if that fails. Just not one I wanted to hold over the weekend. Clean energy, on the other hand, has been suffering. This is more widely traded. We closed a nice trade here. This long effort was a quick scratch. The stop and reverse worked for us. This gap failed. This little round off failed. There was a gap down and it failed all day. So I just said, okay, I get it. It's failing. And it closed poorly, and we're holding about 0.5. So my stop will remain in place here. I would go long here if it breaks out above that hump of the dragon. But meanwhile, I'm ready for this to fail further, and we have a little bit of a cushion. Treasuries, we had bought the statistical excursion down here. This is when it was like 5.8 to 1 on a resumption to the 10-day high. And so we had 2 pretty good days. Today, it gapped down to here, and I wanted to preserve that little win, so I exited right away. It's sold off and held support right here. Uh, this and a re-entry right here would have been the same trade as that one, but I'm actually just going to wait to see it break through the PSAR flip formally and see if it wants to make that move. I if it breaks below, 100.4, then I think I want to be short with the idea that it goes to 95 because it'll break that 100 psychological price level. Tesla, boy, I thought hard about this one. So we got long yesterday on the COTA 2, and it closed right here. Today it gapped down to here to the open, and I just ate minus 0.7. But then it held and is coming here to test. I thought hard about putting the entry back on after observing that it did not fail going into the weekend. And then I just decided, sideways normal. Let's just wait to see it break above 197 and then see how it does up here around 200. Treat this as a tactical trade on Monday and then look to initiate the swing if it gets above 204. That's where the swing will be initiated. Okay? And we already saw a U.S. deal. So that was today's swing. We'll go to the sniper trade of the day. Yesterday's close, this is Alcoa, 3 minutes, standard intraday trader. It gaps down to here, establishes an OR3 right here. There's an inside bar, it opens and then fails, so I just get short at the OR3 with a standard risk box right there. Checker hole, is this just a standard OR3 short? And then within 2 bars, here and here, it runs all the way down to here. So it's already 2R in hand in 6 minutes. So my stop should at least be at no lose plus dinner for 2. So I should have that locked in. You could even take a 1 bar high right there and lock in that much. You could have conceivably added a second position right here on the 2R battle drill. I had a span of control, so I just decided to keep one. Cash the win at the edge of the dragon after the R10 reverses. So this reverses, comes up and runs smack into the edge of the dragon right here. So I take that exit, and that happens after the piece or the RL10 rolls over. And this was such a big gap down, and the sell-off was so quick. Look how far away the PSAR was. So on those kinds of early movers, you need to be prepared to act to preserve wins before the signal comes. In this case, the signal is the dragon coming down here and gives you that little protective buffer. So that locks in 1R. What would we call this pattern? Yep, SSC. You have a harsh winter because we include the price of the gap as if that was just part of a great big red candle. R10 reversal, enters the dragon, leaves the dragon, hits the PSAR, standard risk. I'm looking for it to get to, the high of the day. If it can get through there, it could maybe close that gap. Boy, what a grind. Finally, it gave me that second PSAR flip. It gave me a PSAR flip here, but there was no burning urgency out of this sideways. Really tight compression. At this point, the fact that it did not go and that the rest of the market was really weak, I decided to just cash that little piece and say, if it's not going to go up, maybe it'll go down. So I just reversed and put that little risk box in right there. Check or hold. Failure to fail. It finally gives, we're after 2 p.m. local here, so there's only an hour or 2 hours left in the market. So this little gift was the first sign of directional movement, and then it reversed quickly. And I said, you know what? That may be all that there was today. So I cashed that little piece. Between this little piece and that little piece, maybe an R, maybe. And I thought hard about, stopping and reversing here just because. And I said, hey, there's now an hour left, and this thing has shown no signs of any directional movement. I'm out of this with a plus score, so I'll just leave that alone. I'm not going to bite because I'm, by definition, in the middle of a really quiet crocodile river. So I don't take the long. And it really, it might have given me a half an hour on my best day, but really just nothing happened after that first big sell-off. From here down to the gap, and then a first burst and recovery, then nothing all day. So maybe 1R, and not trying to do too much with it. And that's just what it was. It was a lot of watching paint dry today. So that was the sniper trade of the day. The rabbit did not run. Let's see. Alrighty. All right, let's take a look at the traders today. This was, let's see, U.S. Steel on the 3-minute. This is Kyun. He brings home a little bacon today. There's where it closed. It also gapped down. There's the OR3. He sees the morning hook, plays the SSC, takes a quick scratch or quick loss. Might have gotten short here, but takes it at the PSAR flip, quick scratch. This was a little slow, but not by much. And he gets the trade that was available for 1.6. Now what I want Kyun to notice is the Z3s that he's carefully put. Make those in red so you can see that. When you see that convergence, you're going to recognize that as the chop. And while you might try that one, you probably don't take those, and you get to preserve a little more of a 1.6. So pay more attention to the expansion or contraction of the Z-scores. And now I'm going to say this is broad guidance too. Early in your career with these things, to avoid frustration and to learn to sit on your hands a little bit, I want you to notice this trade, the PSAR flip. His wrist box is not quite down here. And then I want you to just notice PSAR flip to PSAR flip. That's the trade that's available. And then we don't get all chopped up around in here, which ends up in scratching what was you got a pretty good segment of that move, but all the extra work in here got you chopped up. So trust the PSAR. Look how nicely that thing gives us big signals. And remember, your wrist box is really to help you distinguish between signal and noise. So if you've got pick that as your wrist box. The MMRB, that R10, that's just one guide. And with that as your exit, you could live with that. That's about 2R, and then you get this trade as well. Trust the PSAR. It's almost better to take a longer term and maybe a 1R loss than multiple 0.5s and 0.6s. That's how you make sawdust and get burned out. Let's see, Cliff. There's the gap. He does get paid on the short. This was late getting in. I think although maybe not. If you take that as a kata too, that's confirmation that it's not failing. And then again, I want you to notice that the PSAR is a good guide on this one, but I love that you took the exhaustion top and then exited at the edge of the dragon and you got what was there. That's really well done. Could have been short here, and then that PSAR protects you all the way down. You elected for the collapsing dragon here and got chased out quick. Could have re-entered, not much left. Like this long here, that doesn't get you out of that trade. You might have gotten out here or here, but the point is, the PSAR and the RL10 is kind of your guide. But I really like that one. That was very good patience, and I'm really pleased to see that exit. That was nice. And Gary, I'm going to give you the same guidance. The size of that wrist box is probably the R10. I want you to notice how good the PSAR is for you. And I thought this entry here was a little late, because you have a sell-off, an R10 wiggle. You can be getting that long here. And then if you make that your wrist box and then take the PSAR, you get that whole move up into here. And this is a better version right there, because you got the whole PSAR. And then you can take that the whole way down to here. This second position is what caused you to trigger out of that. I agree with that. Because after this hesitation, and then you see it break, you have every reason to believe it should harsh its way down just like it did here. But it didn't, so you got out of it quick. And then when it reversed, I love that re-entry and scratch. That's really nice. I'm just concerned about a couple false starts and then missing that one. If you're going to be taking fractionals, then you have to get back in. There was an opportunity here, and that works to here. And then the opportunity here gets all of that trade too, even though it's kind of choppy. So there was a chance to get a couple R out of this one. All right, we'll go to the reports. All right, so we're on the weekend report, so that starts with the weekend, then we'll do the daily for Monday. Um, let's see here. So, sideways normal. Weakness this week and not really a recovery today. Um, Still holding the globals, and that's been a good play. ETF2 had one more index go below its 4-month moving average, so now the recommended exposure there is 80%. Risk Z still warning us about dangerous waters. In the RLFF daily, here's the two legs up. Here's where it broke. And the PSAR flip on that really tells you important things. Just like this one did. Just like that one did. And now the support level is here. That would be an ordinary routine move. And now you can see the distance between the R10 and the RL270. That's where the trader's price is. And this is the long-term buy and hold fair value price. And the difference between those is why it's a trading game. I also just want you to notice it went below the zero line here. So this is starting to be problematic. Today's price action was a warning sign. I would not be surprised to see a lot more weakness at the start. Now, this little move that's petering out and then the failure to follow through, that is enough. That was enough lack of progress now to make the look at the RL90, which turned right here and has been slowly motoring higher. And this week it peaked and has now started to get negative. So now you start worrying about this thing dragging in order to meet back with the 270 here. So there was a time when it was that intermediate term was pulling away from the long term. The 90 is the intermediate term. The 270 is the long term. So the 90 intermediate. That relationship reversed. This has started to contract. That's why this is problematic. Going out to the 3-day, we've got it. We still have the channel is intact, but really this is danger right here, and then support and support. So there's two. If it gets short from here, there's target 1, target 2, and then look out below. The 90 or the 9-day bars shows there's still a slow grinding upward PSAR support, but it's had 20 days to resume and it didn't. It's starting to fail. So this is going to be an important test. And if that fails, longer term pain and suffering all the way out to the next election. When this thing could run, that would just be brutal. To take it back to the COVID lows, oh my God. The threat of war and election uncertainty. Economy down. Inflation up. Allies are departing the building. Like there is not global support for the U.S. position. There are more in Ukraine. There's a lot more folks just wanting that to be over. And that is a loss of U.S. leadership in the world. So there's plenty of reasons to be concerned in here. We'll just follow the price. The RL 250, or 150 I should say, 50-day look back. 150-day look back, I was trying to say. There's your 150-day highs, lows, one leg, two legs, one leg back. So that was a kata 2. And that's one leg, two legs. Here's the PSAR flip. It's now halfway back. So this whole price action right in here is absolutely crucial. What's it going to do out of this critical state? If that breaks to the downside, then this is our target. If that breaks, this is our target. If that breaks, we should take up subsistence farming. If this holds to the upside, there's your first leg, and then the question would be, does it have enough guts to get through that? If so, then we're right back to 430 for the second leg. So this turns out to be a really important compound critical state. Perfect trading weather. If we were to rotate this slide 90 degrees, rotate it 90 degrees, you could look at this as a very narrow set of train tracks and a train coming. There's the smoke. That train's coming, and you're sitting in that compound critical state. I don't know which way it's going to go, but you better move. And that's why this is like being on the train tracks at this uncertainty coming at you, and it's either going to respond or collapse. The least likely thing is to stay here and to try to stop the train. That ain't going to happen. So this is a straddle trade. The 30-day look back on daily bars. Here's our 30-day. Here's our 10-day. Here's our 5-day snapshot, and here's the 1-day box. And everything closed poorly. And if this fails, then the 30-day low fails, and look out below. But meanwhile, again, compound critical state. If it can break above this, there's plenty of room back to the resistance levels. And on that much risk, there's 1, 2, 3, 4. So strong moves available in either direction. We'll take a look at the BMRs now. Euro-Asia. Even the winners had troubles this week, and that's above average performance. The below average performances are these. So the globals are starting to lose their juice. Only treasuries were in the green, and that had a negative. So it didn't matter where you were this week. If you were exposed, you were suffering. And very thin gruel here. Only the Qs retaining on to a positive note. This is the one that this is a reflection of that weakness, the overextended real estate market for flippers, where that's easy money. Sure it is. Sure it is. All that $10 trillion had to go somewhere, and those guys are probably leveraged to the gills. It's another disaster getting ready to happen. ETF 22, we add the XL series of sector spiders, and the mid caps are the strongest U.S. Then you got industrials and finance and tech, all stronger than the S&P, but energy, discretionary, staples, healthcare, all weaker than the S&P. So the leaders are still leading, the tech leaders and then the guys that make things in the industrials. But boy, you can't spend relative gains. Hey, they're not losing as much. Yeah, you can't spend that. You got to make actual gains. So keep your powder dry in this sideways critical state. ETF 32, nothing to write home about again. Even China's effort at peace brokering just got smashed. So as bad as it is here, with the S&P and moaning that, what's that telling you about relative strength there, China versus the U.S.? And this is the reason for the interest in the clean energy short in PBW. I mean, just look at that misery. So I'm going to just keep riding that thing down. In the Dow, there's a couple places of interest. Merck has been showing some strength. Travelers. Procter and Coke. I mean, Merck, Procter and Coke, that's just about the last gasp of, dividend paying companies. That's pretty thin gruel. And then Intel, that's why I'm interested in that one on the short side. That's in a Godzilla. The vultures are circling. We have in the market health check, the U.S. is in a mixed state. The mid caps are the strongest sector. Tech is getting, and growth not doing very well at all. Europe much better than the U.S. Yeah, so you see the globals and Europe looking pretty good by comparison. Which is odd in a European war scenario. That's the market is smarter than we can know. No real changes in the winners in the ETF model. So this is the ETF 2 model that uses relative strength, 10-week consistency, and 40-week quality numbers on a scale of 1 to 100 each. And Italy, home construction, Germany, Europe, France, oil equipment, Mexico, still of interest to me. Europe, Euro-Asia blend. So that's telling you where the longer-term strength. Now, there has been some give back these last 2 weeks on them. So you can't fall asleep on it. ETF liquidity, looking at the ATR percentage of the top 30 ETFs by average daily dollar volume over the last 30 days. And then we compare that ATR percentage. The ones that are green are both liquid and volatile enough to trade. So that's energy, China, semis, biotech, and then oil and gas exploration, Brazil, and gold miners. Okay, we'll go to the dashboard number 1. We've seen most of this already. Lots of channeling and overreactions, as you would expect. It sold off, but still marginally above the 200-day moving average. The risk off tells me that's not an automatic. Just buy them all and hold your nose. This is compound critical state. Everything in the large caps is on this auto framer. Look at 11 to 1 now in Disney. Walmart quietly getting it done. Look at it. No signals other than 551W and a tiny little micro advantage today. So that, it's maybe the last safe haven. The ETFs also featuring tons of auto framers, lots of little 1 day recoveries, so you get a lot of 551Ws today. I just am keying in on the weakness in clean energy. And Brazil just makes a great trader. So whenever he's in play like that, where he's exceptionally strong or weak, that I'm ready to play that in either direction intraday. So you saw that reflected in the swing portfolio. Go right to the Godzillas. DPZ, Intel, and DG are all violent Godzillas. Intel is the only one in the tactical set, so he's on my shortest trading list, ready to go. It's interesting that only DPZ had an exceptionally large day today, so you might want to prioritize that one for framing. Just a couple, double volatiles. There's DPZ, the Godzilla. Among the most volatiles using the Z5, again, DPZ. Yeah, just a couple. Oh, that's right. I want to look at the... All right, so again, I've got this sorted by reward to risk, the swing trade reward to risk compared to the 10-day high. And all of these that are at the top have sold off from their 10-day high. And then today's range is a certain size. So if we made that the risk, the standard risk for comparison, we compute that as 1R. And then we say how many of those up to a retest of the 10-day high. And that ratio gives you the mechanical reward to risk ratio. Now, how do you get a large reward to risk ratio in this model? Well, two things. You have the fall divided by the range, or the pain. The farther it falls, the bigger the ratio is going to be, and the smaller today's range. So if it goes into max pain and then range compression in a tiny doji, you would get the best reward to risk of all. And that's why I like this frame, because you go from the pain and fear of big sell-off, that negative psychology, to a tiny little doji, which is complacency and balance and maybe a turning point. That is a huge change in psychology from max pain to range compression, which now makes this by definition, a critical state from which, like a coiled spring, this thing could go. Like, if this was a large range, then the pain would be more, but the risk is larger, so the ratio would actually go down. What you want to see in this case is a tight little doji, which acts like a ground zero, and that's making all of that pain and suffering compress like a little spring, and then if it rebounds, you get that powerful move off of support. But if that breaks tomorrow, then whatever caused this thing to fail might cause it to fail more. So you get large moves out of max pain range compression, and that's why this reward to risk ratio is so good. I've been doing that for 25 years. Still my favorite. So I look to my usual suspects, and what do I see? Microsoft on an 8-to-1? Sure. Devon Energy, Intel, Apple. There's four ideas that are, the worst one is 6-to-1. That's pretty good. And then you have tech and the diamonds themselves, and the market itself is in 5-to-1. That's how harsh that thing has sold off and compressed into a relatively small day just from the 10-day high. That's a good posture to be in as a short-term trader. Couldn't pick a better one. Looking at the multi-time frame NDX, all the pain with very few sources of joy. Squarespace and JP Morgan. Merck's not bad, but could have been better today. Chevron, Devon Energy. So you're getting some energy in there. And then over on the ETFs, the only oil, materials, and oil exploration. Otherwise, fear and loathing. And now you get finance and energy were slightly above average today. So it's so bad that maybe it's starting to be good. I don't know. Critical state. Trading value coming from the usual suspects like Ethereum, Alcoa, Tesla, clean energy, Intel, Brazil, Tesla. That's your traders. You need the movement. How do you find movers? Here's one way. These are moving on like a swing and daily basis. That's how much they're moving as a percentage of their price each and every day. And then the frog quality number gives you how consistent has that been. So energy, PBW looks to me like the best, and Alcoa is the best. That's why I was on Alcoa today for the OR3. That's been the most reliable big mover. All right, that's everything I got for today. We'll get this published and posted, and we shall be ready for Story Circle for the coaching group in the morning. On Saturday and Saturday night, the swing trade reviews. And Sunday morning, opening session for the new Creativity 202 cohort. There's still time to join that. That's a 30-week personal coaching journey that is transformational. I'll keep telling you that's a good deal. I learned so much from that this year as a facilitator. It's just not even funny. All right. I had a good meeting today with the Alpha Mind podcast. There's some guys that do trading education in the UK, and I was honored with their podcast, and they want to do probably 2 one-hour interviews because there was too much to contain in today's 30 minutes. So that went really well, and it was a real pleasure to do that. Humbling. So I'll look for that as soon as they get it processed, and I'll get it posted for you. All right, take good care, and see you tomorrow.